The S&P 500 or Berkshire Hathaway? Which one of these two should you invest in? Let's find out. Welcome back, guys, to another video. My name is Nick, and if you enjoy videos related to the stock market or investing, make sure to hit that subscribe button down below and hit that bell notification so you don't miss anything. Now let's get into the video. So when you're looking for a safe investment in the market, say you don't really want to go in individually pick companies, but you're looking more for a wide, broad index fund, most people will recommend the S&P 500. A lot of people, though, don't know what Berkshire is or what Berkshire Hathaway really does. And in this video, I really want to go through the differences between these two picks and help you decide which one is the better pick for your investment. So to start off, the S&P 500 is really the 500 biggest companies in the United States, and it can be tracked by the ticker symbol SPY, that's SPY. Berkshire Hathaway, on the other hand, is a private company that's owned by Warren Buffett, and they have different holdings in private as well as public companies. Now, these are arguably some of the best companies that you could pick, because Warren Buffett, the greatest investor of all time, has picked these. And pretty much what you get when you invest in Berkshire Hathaway is 43 different public companies, as well as a bunch of private companies where they own close to 100% or 99% in some holdings like Fruit of the Loom, Dairy Queen, or Duracell, to name some of the brands. So now, say you are open to picking Berkshire Hathaway, and you think that the picks that Warren Buffett has done over the last few years is the way that you want to also invest your money, but you don't have the capital to go and buy each one of those companies, that's when Berkshire Hathaway is the perfect investment. But what are some negatives of owning Berkshire Hathaway? Well, the first thing you need to understand is that there's two versions of Berkshire Hathaway stock that you can own, BRK-A and BRK-B. So the BRK-A, which is the main stock, comes in at around $325,000 per share. The BRK-B comes in at around $215 per share. So right off the bat, BRK-A is pretty much ruled out for 99.9% of us out there. So BRK-B is the only real investment. But you might be asking, what is the difference between these two? And the answer is that pretty much one gives you voting rights, the other one doesn't. Of course, the higher share $325,000 one gives you voting rights, whereas BRK-B does not give you voting rights. Another big difference when I was looking through these two picks is that the dividends are different. So when you look at the S&P or the SPY specifically, they pay out a 1.7% dividend. Looking over at Berkshire Hathaway, they do not pay any dividend right now. So you're not going to be getting any of those extra gains if you're planning to hold over a long period of time. Another negative here would be that there are commission fees involved. So typically a lot of brokers, when you trade ETFs, when you buy and sell those, they typically give you those for free. However, when you buy and sell stocks, they typically charge you a fixed commission for that. The SPY is considered an ETF, but BRK-B is considered a stock. So whenever you're buying or selling BRK-B, you're going to be paying whatever your commission structure is with your broker. Now, for those of you on Robinhood who don't pay a commission, this is kind of a negligible point. But for those of you that aren't with Robinhood, these fees could add up over time, especially if you plan to contribute bi-weekly or monthly into this investment. Now, the last real negative that I personally see that others might not agree with is that I think that Berkshire really sticks to more safer investments. They aren't really focused on the growth companies, they're more focused on blue chip safe companies such as Coca-Cola, Johnson & Johnson, and American Express. So these companies have been around for a very long time, have established themselves, and have thus earned the title of blue chip companies. This means you're not really going to see any huge gains or growth in these companies, but you are going to get stable performance over the long run. Now, the major drawback personally for myself is that you don't really get exposure to these big tech giants such as Google, Microsoft, or even Amazon. And for me personally, that's a huge drawback because I think these are the type of companies that are going to drive the future. Now, if you're the type of investor that doesn't really care too much about growth companies, as long as performance over time is still good, then maybe Berkshire would be a good option for you to look into. The way I see it is holding Berkshire Hathaway is kind of like trusting a really expert financial advisor with your money. So you know when you go into a bank and you look for a financial advisor, they'll go through and they'll kind of pick out the perfect portfolio for you. Well, in a sense, Berkshire Hathaway is kind of doing the same thing because they're going out and picking from these public and private companies that they think are the best, and they're comprising that into one stock which you can own. Now the biggest advantage really that I can see personally for owning Berkshire over something like the SPY is that there's no management fees involved. So because Berkshire is a stock, you're just going to be holding the stock over the long run. You're not going to be paying anyone for managing that stock. But if you own something like the SPY, there is typically a management fee associated with that. So that's something that you got to keep in mind. So now the really important question that I'm sure most of you are wondering is, which one of these two has performed better over the long run? Whether that's 1 year, 5 years, 10 years, whatever it may be, which one is the better performer? Well, if we jump over to the charts here, you can see that the SPY did only around 24% versus Berkshire's 34% over 1 year. The SPY did 88% versus Berkshire's 120% over 5 years. And the SPY did 113% versus Berkshire's 131% over 10 years. So as a bonus, I thought, why not look into the performance of these two during the recession back in 2007 to 2009, and let's see which of these two held better during that time. So if we look again at the charts, you can see that during this period of time, the SPY was down around 38%, where Berkshire was down around 40%. So really from that chart you can see that the performance was pretty much the same over a recession period, but when the market is doing well, Berkshire's picks seem to be doing significantly better than the S&P 500. So now the question is, should you be investing in SPY or Berkshire Hathaway? Well, I'm not a financial advisor, but if I had to pick one, I think I would personally stick with the SPY. And the reason is because I feel that Berkshire Hathaway relies way too much on Warren Buffett. So in a few years, when he does eventually retire and someone else takes over the company, I don't know if myself or even the market will see this as a positive and will believe in the new CEO as much as they did in Warren Buffett. And this could cause kind of some turbulence in the stock, and in turn could sacrifice some performance in the stock. I'd rather put my money into the S&P 500 if I had to pick between these two, and just kind of forget about it and then come back to my account maybe in 20-30 years and enjoy the massive gains. Yes, I will be paying a management fee for this, but that's kind of offset by the dividend, so I think, in my opinion, the SPY is the better pick. So today's viewer question comes from Biggest Bulls Fan, and they ask if I can do a video on my options portfolio. Now, is this something that you guys want to see? I do trade options and I do invest in stocks as well, but I do keep them separate in terms of my portfolio. Now my option portfolio changes pretty often because a lot of them are swing trades. So every couple weeks or so there are different positions in there that I'm holding, maybe for a couple weeks, maybe for a couple of months, really depending on the market, really depending on the position. Now if this is something you guys are interested in seeing and you want to see what I'm currently holding, especially going into earnings season, make sure to leave a comment down below and let me know. But either way, thank you for stopping by, and remember to invest positively. Peace.